Hi everyone, welcome to Morning Trade with Moneycontrol. I'm Karunya Rao, and in the next half hour, we will get you actionable trading strategies, sector trends, and most importantly, address your queries live on the show. Let's talk about the global handover first. On the global front, inflation fears continue to persist in a big way. Europe closes slightly lower yesterday after finishing May in the red as traders continue to assess new data on inflation and economic activity. Wall Street begins the month of June with a choppy trade. Key indices close nearly 0.5% lower as economic concerns weigh. Tracking cues from the US markets, Asian markets also trade in the red. Our own markets and SGX Nifty hint at a weak start. We put the stock spotlight on Delta Corp, Mold-Tek and Gufic Bio from the small cap space. And also in the what's trending segment, we have Nielsen report which says that FMCG demand in rural areas slowed down for the third consecutive quarter, with volume slipping to 5.3% in the Jan to March period. What lies ahead for FMCG stocks? We discuss on the show. Joining me now is my colleague from MC Pro, Nandish Shah. So let's get started. Nandish, thank you so much for taking time out. Talk to us about overall rural demand hurting, the overall growth story for FMCG, because rural makes up for a big chunk of FMCG products and offerings. How bad is it going to be from here on? Because we're already seeing a third consecutive quarter of decline.
Yeah, it can. First and foremost, thank you for having me and good morning to everyone. I think we are in for a bigger pain in FMCG for the next couple of quarters with especially rural slowing down a bit, and there are still no signs of it coming back.
But between rural and urban, how is the demand panning out? Because rural, like I said, it's going to be an important part and it always has been an important component of the overall FMCG basket. How bad is the demand rural versus urban, or any particular product categories perhaps that are doing well than the others?
Yeah, if we see the Nielsen data for the January to March period, rural has slowed down by nearly 10% as compared to the urban slowing down by 8%. So I guess the pain point continues to remain higher inflation and less of the income getting impacted in the rural segment.
So which stocks are we liking right now amid the uncertainty in the market? Macro headwinds, of course, continue to plague the entire consumption space. Prices have gone through the roof. Yes, many of these companies are trying to pass on cost impact to consumers, so which dents the overall sentiment as well. So by when do you see things easing, and which companies do you think will emerge strong winners?
In the short to medium term, we continue to like Tata Consumers, Marico, Britannia to some extent, mainly because the consumers will continue to buy food items as compared to a discretionary item. Also, majority of these companies are more focused towards their food portfolio, which has been growing in terms of double-digit growth rates. In case of Marico, majority of their raw material continues to be copra, which is where the prices have been continued to be lower, and even the outlook going forward continues to remain the prices for copra to be range bound. So we feel that the companies which are more focused towards the portfolio continues to gain market share.
Okay.
And
okay. We're getting a query right now on the show on Dabur as well. So, do you have a view on companies like Dabur, which have a wide variety of offerings and definitely have a lot of dependence on rural market?
Yeah, as compared to Marico, we don't like in terms of relative performance, we feel Marico will do better compared to Dabur. Dabur in the last 2 years, because of COVID and other related products, their healthcare division continued to maintain a very high growth rate, which is likely to taper down going forward.
Okay. Okay. So overall, what are the big triggers that you will be watching out for when it comes to FMCG space? Whether it's going to be in the form of a headwind or a tailwind, what are the key points to watch?
key points continues to for FMCG continues to remain the impact of monsoons. In case we get a normal monsoon, some recovery in rural spending post the monsoons and the harvest, and the infrastructure spending which the government is likely to do in all these areas, which will lead to higher income.
Okay. Another question is coming your way, and this is on Nestle. Karan has written to us on the live feed. Any view that we have on Nestle that you'd like to share with our viewers, Nandish?
Nestle currently trades at, I guess, around 60 times FY24 earnings, and there will be some pressure on top line growth for Nestle going forward.
Okay. And HUL, how about that?
Sorry?
HUL.
On HUL, it trades at around 55 times FY24 earnings. So, even there, the growth rates is likely to be under pressure.
Okay. All right. How about, the overall raw material cost inflation that we've seen, whether it's palm oil, whether it's, any of the food crops that we're looking at, all of them have seen a massive uptick. By when do you see things easing? Is there anything, that we can expect right now, at least in the foreseeable future?
I guess we have already seen some prices coming off for palm oil. Palm oil, which touched at around 6,000, 6,200, is currently below 6,000 for some bit of time. Even for that matter, wheat prices have started to come down in India, especially after the export ban. So we are already seeing some of the green shoots coming in terms of raw material basket. But whether this remains sustainable or not, that is a bigger question.
Okay. And what about valuations? Are we comfortable with the valuations now that there has been some amount of consolidation that has taken place in the entire basket? Or are they still looking high to you?
I guess looking at the competition and the growth rates, I feel we are in for some bit of pain in the FMCG sector, especially on the multiple front.
Okay. All right, Nandish. Thank you so much for joining in then and taking time out for chatting us about what's happening in the FMCG basket. But, just to flag off what exactly has this Nielsen report says, it's firstly the Nielsen IQ FMCG snapshot for the first quarter of this year, that is 2022, the calendar year 2022. Rural demand has slowed down for the FMCG for a third consecutive quarter. Volumes have come down to 5.3% as per this Nielsen IQ report. And the decline in consumption is happening across the board, but definitely more prominent, more pronounced in the rural areas. These are the big takeaways as far as this report is concerned. Let's shift gears, however, and talk about technicals, talk about individual stocks. Shrikant Chouhan of Kotak Securities joins us now to talk about all that and more. Shrikant, good morning and thanks for joining in. SGX Nifty indicating to a weak open. How are you looking at the trade setup overall for the breadth of the market?
Yeah, good morning, everybody. I think, the market is very clearly into corrective mode. The broader pattern of the market is very clearly bullish in the short term. The short-term trend of the market is indicating us that we are heading towards at least 16,800 or 16,900 sort of levels. But in the short term, because of the overextended rally from the lower levels, we are expecting market to take some pause or to consolidate between the range of 16,700 and 16,300 on the downside. So in case in today's date, it's a weekly expiry day, so we may see the correction up to maybe 16,400 or 430, where the market is having very good support. So between these levels, we should be buyer with a stop loss around 16,300. And again, we can expect rebound during the day. But broadly, we are expecting market to move towards 16,800 or 900 in next few days.
Well, that doesn't look like very good news to start the day with, Shrikant. But want to understand what's happening in the IT space, especially mid-cap IT. Since the start of the show, we've been getting some questions about the tech space. Abhijit Dhar is asking your view on mid-cap IT stocks. Any names that stand out for you?
See, all these IT stocks have fallen vertically in last 2 to 3 months, and most of them have fallen to their extreme levels. But by looking at the overall setup of the Nifty IT, I think it was like very close to its important support areas when it recovered, and the broader pattern is suggesting us that we are going to see furthermore bounce back in the near term. So upward rally is not ruled out after correcting little bit from current levels. If really somebody is interested in buying any mid-cap company, then we are of the view that we should look for adding emphasis BFL, which is currently trading around some 25.30, 25.40. We are of the view that the stock has completed its correction somewhere close to 2300, 2350, and the stock is again ready to bounce back up to 2800 to 2900. It has 200-day simple moving average is around 3000 levels. So certainly it's a buy at current levels 25.30 with a positional view, because the overall setup of the IT index and IT stocks is clearly indicating us that they are going to remain highly volatile. But we should be buyer with a stop loss around 22.50.
Okay, all right. What about Wipro? Raj Kumar has written to us and also one specific view on Wipro.
Okay. I think Wipro has also fallen to its extreme levels, 440, 445. And in the past, I'm going to say in the year 2021, when the stock was moving upward, that time it has taken long pause around 440, 430 levels. After hitting these levels, we saw some recovery in the stock, and we are expecting further more activity or further more pullback on the upward side. So again, here also we are expecting stock to move towards 510, 520 in the near term. So it's a buy at current levels. Somewhere close to 450, we can place our stop loss.
Okay. Now, I want to change gears and talk about the auto space as well. Yesterday, we did a detailed fundamental discussion on the prospects for auto, and things are looking up. And last 1 week, 10 days have been quite good for many of these automobile names, whether it's from the OEM space or ancillary. What is your view on the auto index, and if any names that you want to flag off as well?
I think, most of them have rallied to their extreme levels in the near term, and now we need to be more and more selective. In that space, specifically, we like Tata Motors as well as we like Mahindra and Mahindra. Both are showing a lot of sustenance and strength, and even at current levels also we are expecting further more activity. In fact, Mahindra and Mahindra has broken its previous all-time high of 995,000 of 2018, and it is sustaining well above the same. So it clearly indicates that something is happening really big for the stock, or maybe the overall positioning of the business of the company is very strong. So if there is any correction, we should be buyer, but we are expecting stock to move towards 1150, 1200 in the near term. So Mahindra and Mahindra is a buy even at current levels and more on dips. We also like Tata Motors, which is currently around 440, 445. There also we are expecting stock to move towards the levels of 470, 75, and eventually maybe 490, which is our fundamental target. So it's a buy at current level, and we can keep stop loss somewhere close to 430 for the same, as the stock is volatile. But if there is a medium to long term view, then we should be buyer at current levels.
Okay. We're getting a lot of questions on Yes Bank. Akash Mahindrakar is one I saw on the live feed. Then there was one from Raj Bhandari as well. And several others also have written to us on Yes Bank. How are you reading into the technicals of Yes?
Yeah, technically the stock is holding well above the level of 13, where number of moving averages are placed, 200 days, 50 as well as 20. It has shown some spectacular rally in the month of April from the levels of 12 to almost 16, but now it is correcting back. So we are of the view that 13 or maybe 12.5 is going to act as very good support for it. It is forming some base building sort of formation somewhere close to 13, and we are expecting stock to move back towards the levels of 15 in next few weeks or few months. So it will take time, because the broader pattern is suggesting us that the stock is under accumulation. So it will take time, but 1250 or 13 is going to act as very good support for it.
Okay, all right. You know, Avanti Feeds, I'm hearing this name after very long. Renukeshwar is writing to us to know the prospects in future. He also wants to know whether he should exit the stock or average at the current levels. He's not mentioned the buying price, however. Avanti Feeds, I'm looking at the last 1 month trend and it has seen some very divergent moves. What do you think is in store, Shrikant?
Number of mid-cap stocks are also rebounding from lower levels, but this particular stock is still very close to its lower levels of 420, 430. I think the stock is completely dependent upon the news flow, and based on the news flow or based on the result only the stock moves. Overall, the stock is completely volatile and it is in the broader range of 400 and 600 on the high side. The best part is that we are very close to the support area of 400. So till the stock is holding above 400, I think we should look for holding long positions with a target of again 600. In case if we see the stock starts sustaining below the mark of 400, then only we can expect further more weakness.
Okay, let's talk about some stocks that will be in the limelight on back of some news flow as well. First up will be Delta Corp. Quite a street favorite from the small and mid-cap space. Now, Delta Corp has announced that they've commenced operations at their hotel in Goa, casino operations. And with this, the company and all of its subsidiaries operate about 5 casinos in Goa. So, some positive corporate development coming in for Delta here. Let's talk technicals, Shrikant. The stock has lost about 50-55 rupees in the last 1 month for, for its investors and shareholders. How does it look? How does the future look like right now, at least in the near term?
Yeah, see, like when the stock was around 340, 350, it was at its resistance level and it was at the extreme levels. From there, all the way now, the stock has fallen to the levels of 200, which is its median level. Because the most of the time, whenever the stock rallied, it moved to the levels of 400, and whenever there was a fall in the stock, we saw the levels of 50. I'm going to say in the year 2020 also, when the stock was down or the overall market was down, the stock was around 50, 60 levels. So if we take the median level, then it is somewhere close to 200, 220. I think it's a best level to buy and hold with a medium to long-term view. We cannot buy with a very short-term view because the stock is going to remain volatile, and all these news flows, even though these news flows are there, we are not seeing any rebound or any insider sort of activity in the stock. And to say the stock is not showing any reversal sort of formation. So broadly, we are of the view that if there is a medium to long-term view, then these are the best levels to buy and hold.
Okay. The next stock, but here the news is not very good actually, is Mold-Tek Packaging. Ashish Kacholia has offloaded stake in this company. Kacholia and Himalaya Financial and Investment Company combined sold about 2.25% stake on the 31st of May, and now their shareholding has reduced to 4.55%, down from 6.8% earlier. And Mold-Tek has been a company that Ashish Kacholia has been holding for a very long time. So it's one of his old timers, and he has offloaded some stake here. If we look at the share price, Shrikant, of Mold-Tek Packaging, I think from 800, 810 odd levels, the stock has cooled off a fair bit, and it's now in the last few days once again witnessing some upside. But the question is, will that upside continue?
I think, the stock rallied to its extreme level. Here also the case is similar because the stock was around 200 levels. From there, all the way it moved back to the levels of 850. But since October 2021, when the market has actually topped out, from there, if we see the overall pattern of the stock, then the stock is consolidating between the range of 800, 850 on the high side and 600, 650 on the low side. So till the stock is above the levels of 600, I am of the view that it is going to consolidate. But in case if it breaks the levels of 600, then we can expect further more weakness because the stock is forming some double top sort of formation. So unless and until the stock is not crossing 850, we are not going to see any major miracle. So if we see, I think even at current levels, one should look for exiting or taking some profit on the long positions. And if really somebody is interested in buying the stock, then it is better stock to cross the levels of 900 again. Till then, I think the stock is not going to do anything.
Okay. The third stock, again, from the broad end of the markets, Gufic Biosciences is something we'd like to flag off. Its promoter, Jayesh Choksi, has sold will be selling rather about 0.48% stake in the company. This will be around 4.68 lakh shares between 2nd of June to 31st of July. This is primarily in order to meet the minimum public shareholding norms, because currently the promoter holds about 75.48%. So that 0.48% is something he is looking to offload. But Gufic Biosciences last 3 months largely been flattish. I think if we look at the 3-month returns, yes, around April it did see a good spike, but again it has cooled off. So what's going to be the trend in the next few weeks?
See, like for the long term, if really like somebody interested in buying or maybe holding the positions, then one should look for holding the positions, because the broader trend and setup of the stock is positive. It is indicating us that the stock is heading for 350, 360 sort of levels. And whenever there is a fall in the stock, we saw buying somewhere close to 200 days simple moving average of the stock. This time also the stock is consolidating very close to the same levels. We may see furthermore weakness if there is any weakness in the market, maybe up to 200. But broadly, we are of the view that it is heading for the levels of 350 or 360. So it's a buy if there is a medium to long term.
Okay. How about your own preferred picks from the market right now, given the scenario that we're looking at? What stocks do you like?
I think markets are going to remain volatile, and at the same time, we are expecting rebound from the lower levels. So we need to focus on those stocks which are a little bit volatile and which are with the trend of the market, and maybe some heavyweights. So we like Adani Ports, which is a little bit volatile stock. It is around 735, 736. It has completed its reversal formation and forming some positive divergence sort of formation. So from here, we are expecting stock to move towards 760, 765. We can keep stop loss around 720 for buying Adani Ports. We also like Tata Motors, as the overall trend for the auto index is showing a lot of momentum. In that specifically, Mahindra & Mahindra Tata Motor looks good. It's a buy at current levels with the stop loss at 430, target of 465, 470. And the final one is ICICI Bank, because again it's an index heavyweight stock from the index heavyweight, as well as it is having a lot of huge weight in the bank nifty also. From here, I'm expecting stock to move towards 770, 775, and for this we can keep stop loss around 740.
Okay. All right then. Thank you so much for sharing your stock ideas with us and for helping our viewers out with their host of queries and concerns that they have about their stock holdings. But that's all we have in this edition of Morning Trade with Moneycontrol. Thank you so much for tuning in. But do stay tuned. Markets with Santo and CJ is coming up next.